Good morning, this is Monty once again from DPL Surveillance Equipment. Nice, beautiful morning. Finished wiping down my car already. Me and my wife are going to go out and about, run some errands, stuff our faces, spend some Bitcoin. Basically not do a whole lot of anything very important. We enjoy our leisure time in between going on long vacation trips and short vacation trips, and then coming back home to get settled in and grounded and, to eat right. Sometimes you eat better when you're at home compared to being on the road when you're traveling. So that's what we like to do, and, travel and either short-term trips or long-term trips whenever you guys get inundated with the stresses of everyday life. Take a long-term trip, and then in between long-term trips, try and take a day trip. 1, 2, 3 days is good, just to break up the monotony and give you a little bit more, focus after you relax and all that. So don't take life too seriously. In other words, let me see today's topic and today's news. Let's see. Lots of tariffs going back and forth. $60 billion in new tariffs imposed on China. Blah, 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 blah. Visa, MasterCard settling a lawsuit from the major retailers like Walmart, Kroger's, and maybe Target, and a number of others. There was a lawsuit back in 2012. I'll get into the details of that in the article. But basically, you guys, a lawsuit was settled in 2012 for at least $6 billion. $6 billion with a B, of course. And but the terms of that lawsuit didn't preclude Visa and MasterCard and Discover and those guys from repeating the offenses. So a lot of the major retailers didn't go for it, and they opted out. I opted out of the settlement myself because I read that part, and I'm like, if these guys can repeat these same offenses in terms of overcharging us merchants for the discount fees, the settlement fees, the batch fees, all these fees were extraordinarily high and anti-competitive and monopolistic and all that. So anyway, we opted out. Went back to the court system, and now we have a new settlement of $6 billion, and they agreed to it without the disclaimers and waivers that they used last time, which allowed them to repeat the same practices shortly after and without any repercussions. So that part seems to have been modified. Let's take a look at some other things, and we'll get to that article. Anyway, yeah, that's why we need Bitcoin, because of what Visa, MasterCard, and American Express and those guys are doing. My name is Monty Henry. I'm owner of DPL Surveillance Equipment. I run a full-service surveillance and security equipment company. We have lifetime guarantees and warranties on all the products, 24/7, 365 tech sales and customer support. We have the largest inventory of items that not only can you buy, but you can rent or lay away as well. We have the largest information database or articles directory, our podcast directory, our demonstration video library, the blogs. We have a huge amount of content, basically. It's a virtual media center, tons and tons of content. Read the articles about health, fitness, economics and finance, cryptocurrencies, surveillance, counter-surveillance, all sorts of things in the media center. Okay, so you can learn a lot about surveillance and counter-surveillance on our website, but you can also learn a lot more than that as well. So, and then we also accept Bitcoin and other cryptocurrencies as well in the shopping cart. The website is completely redesigned, so it should be easy to navigate on your mobile device and on your iPad and whatever smart device that you use for mobile. Having said all that, we constantly make the pitch about the credit card industry, the banking industry, the finance industry overall is old, antiquated, monopolistic, and very oppressive financially to the whole population of people out there. Consumers are being literally raped each and every day by the finance industry. That includes the banks and the merchant processors and the credit card issuers. But see, individuals don't know what's going on. They don't know what the problem is. They don't even know what the solution is. Bitcoin, according to the white paper, look it up. Look up the Bitcoin white paper written by Satoshi Nakamoto. Look it up and see if you can figure out whether or not there's a problem at all, and then whether or not there's a solution. See, a lot of people are totally blinded by the idea that there's a problem. But there is a problem, and there is a solution. And right now, Bitcoin and cryptocurrencies and the blockchain is a solution. When Visa and MasterCard and American Express and those guys pay out billions and billions of dollars and fines and penalties, that indicates that there's a problem. You don't pay out that much money if you haven't committed an offense, if you haven't been found guilty, okay? You guys need to be a little bit more proactive and wake up. I don't know whether that area was medicated or falling asleep or just missing in action altogether, but there's definitely a lack of interest in the things that matter from a lot of people nowadays for some reason. Anyway, moving right along. What are we talking about today? Let's get into the article. The title of the article is called, this guy's name is Olaf Carlson-Wee. Okay, the title is Olaf Carlson-Wee wrote the Bitcoin boom to Silicon Valley riches. Can he survive the crash? Again, the name of this article is Olaf Carlson-Wee wrote the Bitcoin boom to Silicon Valley riches. Can he survive the crash? Now running the world's largest crypto hedge fund, the 29-year-old says he's undeterred by recent losses. San Francisco. Olaf Carlson-Wee has crammed the highs and lows of a hedge fund career into roughly 1 year, all before his 30th birthday. He turned $14,502 into a $150 million personal fortune by going all in on cryptocurrencies right before Bitcoin became a household name. His fund, Polychain Capital, earned investors, including Silicon Valley heavyweight Andreessen Horowitz, a staggering 2,303% last year after fees, among the best showing for a billion-dollar investment firm in history, drawing comparisons to Wall Street traders such as John Paulson and George Soros. Now Mr. Carlson-Wee must prove he isn't a one-hit wonder. It isn't going well. Polychain has shed around 40% of the $800 million it made for clients last year through a combination of investment losses and withdrawals by some of its early investors. Some backers grumble that Mr. Carlson-Wee refuses to change tactics despite a broad pullback from crypto. Mr. Carlson-Wee cashed out a big chunk of his personal haul in the fund months ago. Prominent venture capital firm Union Square Ventures has yanked some of its money, while others have fallen out privately with the firm. One investor is suing, suspecting he was underpaid when he moved to redeem his investment. Attorneys for Mr. Polychain and Mr. Carlson-Wee deny that. Crypto fever, meanwhile, has broken. After capturing the attention of the investing world in 2017, Bitcoin, the most well-known of a mushrooming collection of so-called digital assets, is down 55% this year. It recently traded for $6,301, down from its peak of nearly $19,280 in December. Crypto crash. Bitcoin and cryptocurrency competitor Ethereum have fallen sharply in value. How much of it is luck? How much of it is skill? And how much of it is luck disguised? Asks Fred Ersham, one of Polychain's first investors, who is now starting his own fund. At the center of the maelstrom is Mr. Carlson-Wee, a Silicon Valley star who wears neon tracksuits, has 5 earrings, and routinely eats only a plate of refried beans, garlic, and cheese for dinner. He is treated as an oracle by wannabe cryptocurrency moguls who mob him in public. In interviews, he compared his relationship with cryptocurrency to romantic love and likened the current investment opportunity to the early days of the internet. Through each dip downward, he has continued buying, particularly stakes in businesses tied to Bitcoin rivals such as the cryptocurrency Ether. He manages Polychain's roughly $650 million flagship fund, the world's biggest in crypto, from an Apple laptop, surrounded by vintage boomboxes and undisclosed secret San Francisco warehouse offices. I want to emphasize how long I've been doing this, says Mr. Carlson-Wee, who turned 29 last month. This is really just like breathing in and out for me. This account of the windfall and subsequent struggles of Polychain and Mr. Carlson-Wee is based on multiple interviews with people close to the firm, as well as audits and other investor documents reviewed by the Wall Street Journal. Mr. Carlson-Wee's path to high-stakes investing began in Minnesota in the suburbs of Fargo, North Dakota, where his parents were Lutheran pastors. In high school, Mr. Carlson-Wee wrote on SAT tutoring program. He wrote a SAT tutoring program in his spare time. He said he had few friends. His classmates voted him most unique. At Vassar College, he majored in sociology and, against advice from his professors, wrote a senior thesis on a virtually unknown digital currency named Bitcoin. Bitcoin is software that allows people to exchange value directly without any without any government intermediary, essentially functioning as a digital form of money. It was created in 2008 by a person or people under the pseudonym Satoshi Nakamoto. After graduation in 2012, Mr. Wee became the first employee at Coinbase, a nascent cryptocurrency exchange. Until the morning of the interview, he owned only a pair of pants, jeans covered in sap from a short stint as a lumberjack. A shoestring acted as the belt. His $50,000 starting salary was paid in Bitcoin. In July 2016, Mr. Carlson-Wee quit to start one of the first ever crypto funds out of an apartment he shared with 7 roommates in San Francisco's Grady Mission district. With a mullet, a wide collection of vintage windbreakers, and a tendency to speak extemporaneously on esoteric topics, Mr. Carlson-Wee reminded some investors of the 1980s Back to the Future character Marty McFly. The pitch worked. In December 2016, Union Square Ventures agreed to invest in the fledgling firm at a $5 million valuation, a steep price considering its total assets under management were roughly the same. Venture capitalist Ramtin Naimi took a stake in Polychain at the same time and afterward took Mr. Carlson-Wee out to lunch. Over avocado toast, he asked the manager how large Polychain could grow. $50 million is a great target, Mr. Carlson-Wee responded. A few months later, Mr. Naimi repeated the same question. I think $400 million is really the right number, Mr. Carlson-Wee said. Polychain was growing fast because cryptocurrency was suddenly mainstream. Hundreds, if not thousands, of startups were forming to use the blockchain, the software that underpins Bitcoin. The blockchain is said to be able to help airlines track flights, banks settle accounts, and grocers stock food, among other uses. New competing cryptocurrencies popped up rapidly via so-called initial coin offerings that could raise hundreds of millions of dollars instantly. The creators of some coins gave them away to Polychain. Mr. Carlson-Wee and other early adopters hoping for the imprimatur of approval. Polychain would later sell some for profit. Mr. Carlson-Wee spent hours each day at his computer, occasionally responding to strangers on social media sites like Reddit, encouraging them to buy Bitcoin and the like. More big names in Silicon Valley were beginning to invest in the fund, including Sequoia Capital, Bain Capital Ventures, and Peter Thiel's Founders Fund, all eager to get access and insight into the crypto phenomenon. Around the summer of 2017, Polychain irked some of its earliest investors, including friends who had invested months earlier on little more than faith, when they demanded they each invest hundreds of thousands of dollars more. Some didn't have the cash, and were forced out. Mr. Carlson-Wee says the move was required as Polychain made changes to accommodate larger investors and that only a small number of Polychain backers were affected. Mr. Carlson-Wee was growing weary of one-time allies. He raged against an early backer, San Francisco firm Pantera Capital. Just to give you guys some background, Pantera Capital also made an extraordinary amount of money in cryptocurrencies, primarily Bitcoin, when their return got up to like 10,000%. That was the highest. I think that is the highest of any firm. Anyway, that's Pantera Capital. Moving right along. San Francisco firm Pantera Capital, which started a competing crypto fund while it still had access to Polychain's trading information. Mr. Carlson-Wee blocked Pantera from receiving updates on Polychain and threatened to force them and other early investors to sell their stakes before backing down under promise of a prolonged legal fight. In a statement, Pantera said it denies that it misused any confidential Polychain information or otherwise violated any obligation to Polychain. In early November, Mr. Carlson-Wee paid for around a dozen employees to fly to an oceanfront resort in Cancun. The crypto market was soaring and everyone was relaxed, say attendees. One afternoon, some in the group skipped an iPhone back and forth across the pool as they debated whether their device was waterproof. A few minutes later, the phone sank and was ruined. Mr. Carlson-Wee blames a friend, Richard Crabb, for the broken phone. Mr. Crabb, one of the friends who first invested with Polychain, was among those having second thoughts. He had invented his own coin dubbed the Numer, which briefly made him wealthy on paper as investors, including Polychain, bid it up. But Polychain subsequently sold some Numera, depressing the value of Mr. Crabb's holdings. Mr. Crabb shortly after redeemed his investment in Polychain funds for what he says were unrelated reasons. Union Square Ventures, one of Polychain's earliest backers, was also debating its investment. Polychain was racking up millions in gains, but only on paper, and the digital currency was volatile. At a panel discussion during Union Square's annual investor meeting in November, one attendee asked for the firm's thoughts on Polychain. "Oh, Olaf," responded Union Square partner Albert Winger, inserting an extended pause, according to an attendee. "He's a bit of a gunslinger." Union Square co-founder Fred Wilson said he doesn't recall Mr. Winger making such a comment and says the firm still has faith in Polychain. Still, Union Square decided to put some of its money in Polychain late last year. He says, in an effort to de-risk the investment, he says Mr. Carlson-Wee is a quirky guy who makes up his own mind and figures things out in his own head. Mr. Carlson-Wee isn't bothered by Bitcoin's daily churns. On a recent weekday afternoon, he left his cell phone in his dusty black Cadillac Escalade for a 90-minute technology-free hike to the site of an ancient volcanic crater in the Oakland, California hills. In between digressions on movie trailers, he won't watch them, fearing spoilers, and capitalism. Just 1 second, there's a helicopter going over. We'll see if we can let it pass. He won't watch the movie trailers, fearing spoilers and capitalism. In a natural but not imminent decline. This is what he's saying of capitalism. It's in an imminent and natural decline. He talked about how he doesn't consider himself a trader. One thing I want to emphasize is that as a trader, when something doubles, you sell half, or something like that, he says, making air quotes over the word trader. At Polychain, he says, we don't trade, we shift around positions. Mr. Carlson-Wee described his approach instead as long-term, thesis-driven investing. This philosophy, shared by blue-chip technology investors such as Andreessen Horowitz, is that a cryptocurrency is only one branch of a larger upending of the digital world. Most existing online entities, from dating applications to enterprise cloud computing, will be replaced on a less expensive decentralized infrastructure, the blockchain. The question for evangelists is which of the hundreds of competing blockchain platforms will reach widespread adoption. Last year, Mr. Carlson-Wee was largely placing a bet that his favorite platform, Ethereum, would win out. More than one quarter of Polychain's fund was invested in Ethereum, according to its most recent audit. Ethereum is down 74% this year, and Polychain's main portfolio is down by 31% through the end of July, the latest figures available. In communications this year with investors, the firm defended its performance as better than the crypto market at large. Investors in the fund credit a shift from assets such as Ethereum into less liquid, more stable stakes in crypto companies internationally. That's a less volatile bet, but one that's harder to get out of in the case of an extended decline. Since the start of the year, Polychain has blocked investors from redeeming their money immediately, instead putting investments in a so-called side pocket that now comprises more than half the fund. That means investors can't cash out fully, even if they wanted to. If cryptocurrencies go to zero, we go to zero, Mr. Carlson-Wee said. I don't think anyone is under any illusion that that's not the case. Mr. Carlson-Wee is rich either way. Unlike many firms that hold illiquid assets that are paid only when they sell investments, Polychain's main fund takes its fees every year on paper gains. Mr. Carlson-Wee started last year with just $14,502 in the fund and turned that into $150 million of fees. He cashed out $60 million, a move that raised concerns among investors about his commitment to his own fund. He says he set aside money for family and subsequently invested more in the firm's funds. This model will not last, says Jing Sung, a Polychain investor. Polychain is now raising new funds that won't charge fees until they realize gains. Mr. Carlson-Wee and Polychain face a lawsuit in March, filed in March from an early investor, professional poker player Harry Greenhouse. In court filings, Mr. Greenhouse says he asked for his money back late last year and was partly repaid at cost, or for the price originally paid, as opposed to what it could be sold for. He alleges Polychain won't detail how they valued his investment and suspects he was underpaid. The matter is in arbitration. Mr. Carlson-Wee now straddles the line between Crypto Kid and Crypto King. He has pared back his time on online message boards to 15 minutes a day from an hour or more in years past to spend more time on the fund. He recently chopped off his mullet because being known for such an idiosyncrasy reminded him of something a hedge fund manager would do. He moved the firm to new offices in a converted warehouse. The San Francisco address listed on Polychain's public filings is a fake designed to fool would-be hackers and kidnappers who have targeted other crypto traders. This is going to be such an epic adventure either way, Mr. Carlson-Wee said, smiling. Like, if this whole thing collapsed, that would be crazy, you know. Just to summarize that part up of the article up, Mr. Carlson-Wee is reminding all of us crypto investors that we're in it for the long term. If you're not sure what you're doing, you're not sure why you're investing, don't invest. If you read the white paper, if you understand there's a problem, then you understand that this is a solution. You don't jump in and out of investments like this, like people jump in and out of buying TVs or radios or something. You commit yourself, you understand what you're doing, you don't get buyer's remorse every 5 minutes. You make sure you understand that this is a long-term play. When Bitcoin spikes up a little bit or something, take some profits, pay some bills, take a trip or something, but leave your principal, leave the 90% of your investment intact. This is just another reminder. A lot of us have made a lot of money, and including Carlson-Wee and others like him mentioned in the article. But we did so out of patience. So moving right along. The problem that Bitcoin is addressing, MasterCard, Visa agreed to settle merchant antitrust suit. The proposed amount of $6.2 billion settles a long-running class action lawsuit with retailers over the fees they pay when accepting card payments. MasterCard, Visa, Incorporated, and other financial institutions have agreed to settle a long-running antitrust lawsuit with merchants over the fees they pay when they accept card payments for a proposed settlement amount of about $6.2 billion. The proposed amount includes $900 million from all of the defendants, including a number of banks that issue debit and credit cards, including J.P. Morgan Chase, Citigroup Incorporated, Bank of America, It also includes roughly $5.3 billion already paid by the defendants as part of a $7.25 billion settlement reached in 2012. Visa's share of the new settlement is $600 million, which it said it set aside for the settlement on June 28th, including the 2012 settlement money. Visa's share is $4.1 billion. MasterCard has agreed to pay an additional $108 million on top of the $790 million it agreed to pay in a settlement in 2012. The merchants also alleged that the card networks have intentionally set fees and card acceptance rules that primarily benefit the banks. The merchants argued that they want the ability to negotiate their own fees directly with the banks instead of through card networks like Visa and MasterCard, which settle the fees with the banks independently. The defendants involved in the case said that part of the suit that seeks to revise network rules isn't covered by Tuesday's settlement and won't result in any immediate action while the parties engage in negotiations. The settlement Tuesday, which was originally reported by the Wall Street Journal in June, would still be subject to court approval. This could cap a long-running class action lawsuit that was brought by merchants in 2005 against Visa, MasterCard, and the largest U.S. card-issuing banks. When the original $7.25 billion settlement was reached in 2012, many large merchants opted out, largely due to terms that would have barred them from filing lawsuits against the networks over future swipe fee increases. An appeals court invalidated that settlement on the grounds that merchants weren't adequately represented. The Supreme Court last year declined to hear the case, shifting it back to the district court. In this case as well, MasterCard and Visa said they expect to be relieved of all future monetary claims alleged by the class action lawsuit related to the company's interchange and fee structure, as well as merchant acceptance rules for at least a period of 5 years after resolution of appeals. The card networks have come under scrutiny, in particular over the fees they charge merchants when a consumer swipes a card, known as interchange fees. After each transaction, the card networks set the fee and the merchants pay the banks, yet the merchants in the suit allege that the networks and banks have colluded to inflate the fees. That's about it for this article. Just want to reiterate or recap. This is the problem, this later part of the article about MasterCard, Visa, and American Express paying $7.25 in one instance, $6 billion in another instance, additional fees of $900 million, additional fees of $600 million. All of these fees are an admission of guilt, that they are colluding, you guys, to screw you. I don't know how more bluntly or simply I can put it. When you settle for these stupid rewards points and you use these stupid credit cards and you ignore Bitcoin and blockchain and the cryptocurrency industry overall, you're ignoring it to your own peril. These guys have been caught red-handed, and it took Walmart and Kroger and a few other companies to stand up, make sure that these bogus settlements don't go through, and they held out, including myself. We held out and we protested and we went to social media and we did everything possible to make sure we got another settlement. Now, this second settlement of $6 billion is hopefully going to remedy some of the issues so that you don't pay exorbitant prices and overhead when you buy your consumer products every day. Your nice, bright, shiny gadgets that you guys love to buy every day are inflated to cover the overhead when these credit card issuers and banks collude to raise fees and costs across the board for everyone. Everyone pays for this. No one gets a free lunch, okay? That's not the way it works. You don't get a free lunch, okay? But anyway, when you are aware of the problem, hopefully you'll be aware of the solution. So as I like to say at the conclusion of every podcast, you guys keep your eyes and ears open and stay safe out there. And we'll talk.